Alright guys, this week's pretty special, you know? First of all, I'm coming at you from a hotel in New Jersey because I had some work training I had to take care of, but it has nothing to do with stocks, so let's get that out of the way. Next up, my brother just had a kid. I'm super excited. It's super dope. His name's Colin. Other than that, let's get to the stock market. So I hear guys all the time tell me they just want to set it and forget it. They want to throw the money in there and they don't want to worry about it. Okay, that's all fine and dandy, but that's not what this podcast is about. And if that's you, if you don't want to do it and you don't have the time at all, period, or don't think you do anyway, then GTFO, bro, because this isn't for you. But you can trade better than the pros. That's why I'm here. Today I want to talk about investing in stocks versus investing in your 401k. What's better? What's worse? Is there one that's better? Could you do both? Maybe so. Oh, one last thing. Go hit that subscribe button on that podcast you're listening to on Google Play, Spotify, or iTunes. And if you haven't checked out my website yet, hit that up too, skyfi.co. I'll go over a little bit more things in detail there on my Toasty post that I do every Sunday.
Okay, Toasters, let me make something clear. I am not here to sell you advice. I also won't tell you by listening to this podcast you'll succeed. I'm not a pro investor, nor do I claim to make you rich. I am, however, showing the next generation of investors that investing in stocks does not have to be rocket science. Welcome to the Toasty Podcast. Now let's get toasty.
So today, like I said, we're going to be talking about investing in stocks versus the 401k. We're going to be talking about what is a 401k and what's in it for you. Why isn't this good enough for you? Because all I want for you is to be happy. You can have it all, or just these investment accounts. Everything the light touches is yours, Simba. If you're bored already, listening to this podcast, this might not be for you because I don't think this will get better. 401ks are normally a boring subject, and that's probably why most people don't want to talk about it. And they relate stocks to 401ks anyway, so if you bring up stocks, well, it's just the same can of worms. They don't want to open it. A 401k is a specialized investment account that you can contribute to specifically for retirement. It's a tax-preferred retirement account, meaning the money you put into it is not taxed. This reduces your taxable income, so your income tax will be lower for the year. Sounds dope AF, right? Wrong-o, my newly acquainted listener. When you get old and withered and actually start to take out the fortune that you've hopefully earned over decades, this means you get to take the earnings, but you better hope Liberty herself is still feeling mighty, because you're going to be relying on the Federal Reserve and the USA to give you back your return with a decent tax percentage. Oh, so you're still into it. Okay, let's get one thing straight. I've got a bias against 401ks because I'm convinced we can do better in our own portfolios. Like I said, I think you can trade better than a pro. And I do actually believe that. But just like any fine wine, there's a time and place for everything.
Turns out my mic setup was trash. Get ready to turn up the volume.
Anyway, all bias aside, I'd recommend a decent investment account based on index funds and low-cost mutual funds to anyone just starting out in their investments. Maybe put at least 10 grand into this before you decide to jump in. But when you do decide to jump in, check out my 5 steps to entering the stock market, Toasty Podcast, or Toasty Post on my website, skyfi.co, to get an idea of how easy it is to set up your investment account for stocks. I'd rather you do that than start trading out blindly in the stock market, because it'll get you nowhere, and it's always good to have that safety net, you know? This is how I do it, and I'm okay with it. But just know that whatever managed accounts you have, the funds you're in, the ETFs you trade at with your 401k can be found outside of your retirement account, like in your own account. They trade like a common stock. They have their own ticker. Oh, so you've already started in your company's 401k plan? Okay, don't sweat it. But you need to find out where that money's coming from. Who knows what the default fund is or the default target date fund is? You could be set up to retire at 75. That would suck, dude. But while you're at it, see if you can just spot your account fees and trading fees on that same account, because I don't think you'll be able to find it, TBH. Retirement accounts set up by employers aren't always as transparent as Robinhood or Fidelity are in the individual account sector. So call them, please, or don't. Not really up to me. Now, if you took the time to set your contributions correctly for your age and risk tolerance, you can continue to throw some money into the 401k. I'd at least put whatever your company matches. Oh, wait, your company doesn't match? Where's that fine wine I was talking about? Because you look like you need a drink.
Oh my
it isn't all bad. I mean, you're still investing, right? And the money's still making money on top of that, like a good little dollar. But the truth is, there's something better out there for you. And if your company has decided to be a pill and offer zero incentives on your 401k, go check out an IRA. That's an individual retirement account, or a Roth IRA. These are basically the same as a 401k or a Roth 401k, but not supplied by your employer, and they most likely have a lot more options in the mutual fund or target date department. You can roll over whatever you have in your 401k for a small fee without the money being taxed in a usual scenario. You're welcome. So, if you didn't know this, technically your money still ends up in the stock market, even if you invest it into a 401k, especially when you're young. If you go have a look at your asset allocation and your 401k portfolio, you'll most likely see a pie chart made up of different assets. This will include stocks to some degree or percentage, and you're most likely in an 80% range for stocks. I mean, if it were me, I'm at about 98%, but I can be a little bit of a risky Roger. It's not bad at our age either because we can make it back. That's the whole point.
Millennial status, am I right?
If you're wondering why everyone describes a 401k as one of the safest places for your retirement money, it's because of the type of return you can expect, along with the idea investors like to call diversification. But I'm not feeling that explanation right now. That's a big can of worms that I don't want to open. So if you go hit up my website, skyfi.co, check out the Toasty Post blog, and go to this Toasty Post for 401k versus investing in stocks. I got links there, man. I got links everywhere. Links on links on links. Most of them are to Investopedia. So as you can tell, I like Investopedia. It'll tell you anything about anything in the stock market. I'm telling you. It's just a little bit more complicated than I like to be. And that's why I'm here.
I'm the bridge, man. I'm the bridge for you. We'll get diversified soon, so don't worry about that yet.
If you want an easy way into diversification without the headache of picking your home team, that's what I call my portfolio, check out the ETF. Again,
hit up Investopedia if you don't know the definition. Serious, dude. Lifesaver.
Here's the deal, Pickle. You can have both of these accounts. I mean, my advice is you supply your 401k or IRA with your retirement money or enough to get the full employer match, but get your side gig going, dude. Set up your own individual account. Start trading stocks, getting used to it, learning it, testing the waters. I don't get paid for saying that, but it sure would be dope. This way, you'll sleep well knowing you aren't ruining little Timmy's future, having that safety net. Besides, it'll give you a solid comparison of how well you're doing, year over year. You'll be surprised how well you do after you get the hang of it, stocks I mean, compared to your retirement account. You can do better, or see my 5-step plan to begin trading. Moreover, you'll wonder how the financial managers even get paid so much money, but that's for another Toasty podcast. All right, it's been fun, Toasters, but let's get real. I give out advice, and that's all it is. Your boy might be invested in the stocks I mentioned, but it's not a recommendation. I'm not here to make you rich. I'm showing the next generation of investors that it's possible to beat the S&P with no degree and some research. You do you, boo. But no matter what that means, please subscribe.
Toasty.